Property firm Balwin has recorded a slump in earnings, with profits more than halving to 76.9 million rand. This comes as it had to deal with tough macroeconomic conditions during the half-year period, characterized by high interest rates. And joining me now to take us through the 6 months that was is company CEO Steve Brookes. Thank you so much for your time, Steve. Now, we saw pressure from the top to the bottom line. Was this all in the macro economy?
It's been a tough 6 months. Balwin's been going since 1996. It's our third economic cycle that we've been through that's been tough. So our product is resilient. Yeah, it's been hard. Interest rates are high. Consumers are under pressure. I think we've done quite well in the circumstances, and we've worked extremely hard to keep our clients happy, and they're still buying our product. So we're still in the trenches and hoping for some interest rate cuts coming up.
Well, I mean, just before actually we get to that interest rate cuts conversation, I mean, obviously the macro environment is tough, but as a business, you do kind of work on the controllables. Paint a picture for me of those controllables, what Balwin had to do to respond to the challenging conditions, what that looked like.
Yeah, so we did some extremely tough cost control. We've kept our staff, which is very important through these tough times. Because, we don't want to be known as a company that makes redundancies. So we've kept our staff going, and they've worked tirelessly. We do our own contracting with all our various contractors, so we've trimmed that down. We've slowed down our construction and brought it in line with sales, and gone on some very, very aggressive campaigns for marketing, which have worked, and tried to keep our best to keep our clients happy, meaning make sure our defects are as close to zero as possible, and our quality control is of a high standard, because, as you know, if you keep a good quality product, you will survive the markets.
Steve, I mean, within Balwin's different residential offerings, have you seen differences in consumer appetite during the, in the current economic climate?
Yeah, we've always had quite a resilient offering. The ground floor is a 3-bedroom for the families, and then above that is the 1 and 2 bedrooms. So the 1 bedrooms have been very, very popular, which is obvious because they're a lower price, which with the high interest rates, that's always going to be the popular seller. But we have to build a defensible model, because otherwise, as interest rates drop, we can't keep chopping and changing. So I believe our model is very defensible.
All right. I mean, let's actually go into those cuts, because the South African Reserve Bank did cut interest rates in September. Of course, I do understand that this was after the reporting period. But I mean, just looking at things from then until now, have you started to see any green shoots in demand from that, or do you maybe expect more of a slow burn?
Yeah, it's been very slight green shoots, but honestly, they should have cut 0.5%. 0.25% it didn't help the consumer. It helped, but very minimal. We're all hoping now on the 21st of November for 0.5%, and then maybe a little bit more in the new year. We need a 1% overall cut in the next couple of months. The consumers out there really, really are struggling. There's a lot of repossessions of cars. There's a lot of defaulting on levies, a lot of defaulting on property. The government needs to look into that, and I'm not an economist, but, they definitely need to cut 0.5% now.
Yeah. And I mean, just looking at, obviously, there is a slow burn, but at the same time, maybe some slight green shoots. Do you maybe expect, because we still have 6 more months in this financial year, that maybe there will be a bottoming out of that pressure in the economy that will filter down through to the business, where you will see a bottoming out of the challenges?
Yeah, look, it is the GNU is really, in my humble opinion, working. I know it's not perfect, but it is working. We're a new democracy, so it's, we're not in a 200-300-year democracy, unfortunately. Also, the electricity staying on, which is to me absolutely critical. I know we've got water issues, but if we have 0.5% cut, I definitely see better results for the next 6 months, definitely.
Let's go into that balance sheet, Steve. What is that looking like? And also, what does your runway for debt reduction look like at this point?
Yeah, look, our balance sheet is good. Our debt is a bit too high. We've targeted that. We want to reduce our debt, which is any good company wants to reduce it. You know, we want to make sure that going forward our debt is at a much, much lower level. Also takes the bump out of these tough economic climate. But, you know, we're in good shape. We're working hard. It's not an easy business. We luckily have a large land holding, which sometimes is perceived as negative. But, you know, you have to own land, otherwise you can't build.
I mean, you talk about the debt that is too high that you are working on. Are there any targets and timelines that you have in terms of that journey of reduction?
Yeah, look, I have a long-term target of only having 1 billion rands worth of debt, but that will take a couple of years before we can get to that. And again, it largely depends on macroeconomics.
And just in terms of shareholder value and returns, what can you say to your investors at this point, Steve?
Look, hang in there. It's tough. I mean, you know, we didn't declare dividends. You know, hopefully going forward we can get back onto dividends because, to my opinion, Balwin's always been a dividend play. So, yes, thank you to all our shareholders. It hasn't been easy, but, you know, we're still a good company. So hang in there, please.
All right. Well, thank you so much for your time and giving us some more insight on the numbers that we saw coming out of Balwin earlier. That was the CEO of Balwin Properties, Steve Brookes.